Welcome back to Cheddar. I'm Ken Booth. The sound you are hearing is the sound of the closing bell ringing. And over at the New York Stock Exchange, we have Teach for America as we appreciate this Teachers Appreciation Week. And all over at the NASDAQ, we have Columbia University School of Nursing because we have Nurse Appreciation Day as well. So let's see how the markets closed on this Friday. And you can see, yeah, Wolf is right. A lot of red, but it's not as bad. It's not as bad as it was earlier in the day. So the Dow is now down about 0.3%. The S&P 500, that is down a little more than 0.5%. And the NASDAQ pulling away from the 2% mark, closing around 1.5% in the red to close out a volatile week that we've had in this May session that just began.
Let's take a look at some of our stock standouts from the day on this Friday. First, let's talk DoorDash as it sees sales booming. The food delivery company reported a 35% revenue jump in its latest quarter and a strong sign for its future growth, but still reported a wider than expected loss. DoorDash saw a 23% increase in the number of deliveries it made in that period. It also saw strong growth in new customer additions. DoorDash outlining in a letter to investors its plans to invest in category expansion. Things like grocery, alcohol, retail deliveries. Taking a look at DoorDash sales, they ended the day in the red about 1.5%. Let's talk Sweetgreen next. The company reported mixed results in its most recent quarter, but sales soaring as employees returned to the office. They went back to buying from the salad chain. Same-store sales jumping 35%, while the company also raised prices 10%. Sweetgreen saw wider losses due to $21 million boost in stock-based compensation. The company also raised wages and worker bonuses, which weighed in on those profit margins. Sweetgreen shares ending the day down about 9%. Let's talk Peloton next. The company is reportedly looking for a minority investor to help solidify its business as the at-home fitness company sees its stock hit the brakes. Peloton shares hit an all-time low today. Investors seem cautious on whether the company can regain momentum it saw earlier in the pandemic. And after new CEO Barry McCarthy took over for co-founder John Foley earlier this year, Peloton is working to turn its business around. The Wall Street Journal reporting the company is looking for an investor in private equity firms or other key players in the industry to take a stake of between 15 and 20%. The report says the talks are in the early stages, are not guaranteed to lead to a deal. The company has faced pressure from activist investors who called on Peloton to look into a sale altogether. We will learn more about Peloton's state of business next week when the company reports earnings. Of course, we'll bring that all to you live. Peloton shares ending the day also in the red, down 7.7%. And last, but certainly not least, our stock of the week. Kellogg, the cereal and snack manufacturer, raising its full-year outlook when releasing its latest quarterly earnings this week. Kellogg reported beats on both top and bottom line estimates. The company pointing to global growth in its snacks business in particular. Shares trading a fresh 52-week high today, even as the broader market continues to sink. Kellogg shares, though, are actually in the green, up 6.6%.
All right, Henna, thank you. Now turning back to the major averages, stocks extending losses and closing lower to end the first trading week of May. Joining us now is Melissa Armo, founder and owner of the stock Swoosh. Melissa, it's been a roller coaster of a week. Why are stocks continuing to lose ground into the weekend?
One of the reasons we're selling off, and the major reason that we've been selling off, is because of high inflation. And now the Fed is going to increase interest rates, which of course is going to slow down economic growth. So I think it's a problem for markets. And I think that Powell has lost a lot of momentum now from people. People just don't trust what he says, that they're going to stay on this course and be able to lower the levels of inflation. That's why you saw the market flip from Wednesday's rally into Thursday's sell-off. And now, of course, we're ending the week down even more.
Now, stocks largely in the red today, as you know, despite a stellar April jobs report showing a gain of 428,000 jobs. So why do you think markets just shrugged this off?
Because they're worried about higher interest rates. They're worried about a recession. They're worried about inflation. They're worried about Russia, Ukraine. There's so many things in the forefront that could affect markets. And unfortunately, none of them are positive. What would have been a positive thing? A positive thing would have been if, for example, we had any good earnings in tech. All of the major earnings that would have affected the market, all the banks, Amazon, Netflix, Google, all of those were down. Even ones that had good reports forecasted problems in the future with the slowing economy. So that's a problem. When interest rates rise, it hurts not only the consumer, it hurts businesses as well because borrowing costs are up and then they have to raise prices. And again, if they don't sell as many products and they don't make as much money, which affects the bottom line of profits of these large corporations. And what is the market made up of? The market's made up of companies. The S&P is 500 stocks. So, I mean, again, it's all companies. And so that's what's happening right now. And again, the market, I think, has much room to go lower. And we tried to recover today. It failed. It was a weak rally. I wouldn't be surprised if we were down on Monday morning.
Ouch. All right, so the Federal Reserve announced Wednesday it would raise rates by 0.5 point. Stocks soared, remember? But what have they erased those gains and more? Why is that?
Well, we erased the gains because, again, Jerome Powell has lost credibility because they were wrong for the last 2 years on the inflation. Remember going back 2020 into 2021 when prices went up and there were supply chain issues. We still have those issues. And he's basically saying, hey, if we raise rates, we will prevent a recession. But that doesn't stop the supply chain issues. And it doesn't stop the fact that we had too much stimulus and too low rates for too long, that we have so much free money going around. One of the problems with the report today, and one of the reasons why it was a mixed reaction, is even though we had increased job numbers, we had low levels of participation. There's too many people that are not working. That number is like 60% or something it was this morning. So there's not enough people working. And if you're a consumer, you go out, you go shopping, you try to call something, you're on hold for 2 hours, you know there's really not enough people back to work in the labor force. Again, with all this stimulus, I think it's created a problem with productivity. But getting back to what we were saying about inflation, that the market's worried about it because, again, raising rates and raising taxes is a problem. And to do all of this in a time right now where we have the backdrop of the Russia-Ukraine situation, it's really not a good situation going into the summer. I wouldn't be surprised if the market doesn't even make a new high the rest of the year in 2022. And that will be shocking for a lot of people that are invested and are used to the market making multiple new highs. We don't have enough people back at work, and that's a big problem. And again, it's also a problem as far as raising rates is going to mean prices go up. So it's going to slow down economic activity. That's not going to solve the problem of getting people back to work.
So is 0.5 point hike enough?
Again, if they did a point, if they did 0.75 basis points, I don't think that's going to stop a recession. And I don't think it's going to curb inflation because the Fed is late. That's what I was saying. I think Jerome Powell has lost credibility here because they've been wrong all along the way. And so now it's almost like too late. Like even if they raise rates too much, too fast, which it sounds like they're going to do, it's going to create a worse problem where we're going to be in a recession, but we're going to have inflated prices and we're going to go into recession anyways. I'm not so sure if we can stop going into recession. And then we have, again, low labor participation. I think that people just need to I heard you talk about the cereal. I think people need to either understand that things are going to cost more and budget for that and account for that, or maybe change their spending right now where they're buying different products or lower grade products, because I don't think that things are going to change. And people that live paycheck to paycheck are going to need to budget that, accordingly.
All right, Melissa Armo, founder and owner of the stock Swoosh. Melissa, have a great weekend and thank you for being on the show. All right, coming up, Ukrainian president saying the Russian shelling of a steel plant in Mariupol has not stopped, with many civilians still needing to be evacuated. We'll go